retain all dividend and interest payments, and they then reinvest them. The retained dividends or interest is referred to as notional distribution. You do not receive any cash from these distributions, they're automatically put in. However, because it was a dividend, or the fund had invested in companies that paid out a dividend or paid out interest, that is subject to income tax. So although you did not receive any notional distribution or any dividends or interest, you do have an income tax liability. Okay, so the first thing to pay attention to, if you receive a notional distribution, even if you don't get any cash into your account, you have to pay tax on the amount that was received. From a capital gains perspective, however, the value of the notional distribution is then distributed across your units. So let's give a very simple example. If you own 100 units and let us say you receive £100 as a notional distribution, then the value of the notional distribution should be used proportionately to increase the cost of your existing units. So 100 units divided by £100, £100 divided by 100 units means that the cost of your units would increase by £1, therefore effectively offsetting future capital gains. This will become clearer when we walk through an example. Let's consider the following example. On the 1st of January, let's assume that again 10,000 units were bought at a price of 300 pence. So the total cost of the units before any notional distributions was £30,000. Then on the 1st of May 2007, another 5,000 units were purchased at 200 pence, and again the total cost before any notional distribution was 10,000. Now on the 1st of July 2007, let's assume that a notional distribution was received of the equivalent of 10 pence per unit. Okay, so there was 15,000 units owned at this point in time, therefore £150 was received as a notional distribution. So no money changed hands, but from a notional perspective you received 10p dividend, shall we say, or interest from your units. Okay, therefore the unit cost then has to be apportioned as shown. So the transaction on the 1st of January, so we have the original cost of £30,000. You then apportion this £150 based on the amount of units owned versus the total number of units. So we have 10,000 units, okay, divided by 15,000, which is 10 plus 5, okay, then multiplied by the notional distribution. Okay, so that equates to £30,000 and 100. Okay, £30,100. Then on the 1st of May, that transaction, you apply the same process, the original cost plus the apportioned notional distribution, which is again £50. Okay, so you can see that the cost in both of these examples was increased proportionately to the number of units held.